welcome. This is the Trading Pit, your home for sophisticated takes on the crypto markets. It's May 14th, and here in the studio is JJ and Ben Lilly of J Labs. I am your host, Mark Coney-Wine. Today's show, we're going to be looking at that hot PPI report. We're going to be asking about if the compression in the market is going to look like it finally break, and whether or not there's something more exciting behind all these crazy crypto chatter. But first, we got rapid fire, where I look for simple answers to complex questions. Ben Lilly and JJ, you better be ready. These are some hot ones. Ben, you ready? Ready to kick this off? All right, good to hear. All right, so Ben Lilly, last of the 13F filings arrived, and banks were the huge buyers. We saw that Bracebridge Capital, who I've never heard about, but apparently they're big stuff, had over 300 million plus in Bitcoin ETFs. Is this news bullish, or are we fading it?
I believe they're managing some endowments. I think Yale and Princeton, and even we're on deck for Argentinian debt restructuring there. So they're a global player sitting at those tables. It's got to be bullish.
Oh, man. Oh, I got to find my bull crowd. Oh, my gosh. I can't even find my sound effects, just aren't in play. All right, let's move on. JJ, your favorite man, Drunken Miller, says 6% inflation if Trump gets elected. It's stagflation if Biden's elected. What's your poison?
Don't fade truck. Go with whatever he says. So
okay, you're going to take Orange Man. Orange Man just put the accelerator on and put us to maybe 12% inflation.
Yeah, ramp it up. Let's see. I think Druck's spot on though. It's probably likely continued stagflation if Biden wins, and off to the races and everything, including inflation if Trump wins. So,
boy, what an optimistic take on the world. I love that. Love the Drunken Miller. Maybe he needs to go on another 6-month sabbatical so he can come up with some optimism. Ben Lilly, we had S Smack, which terrible name, but that's a guy I found on X. He's the compound VC. He wrote a piece suggesting that we're in the front third of this run of this bull market. Is that true? Is that where we are?
Not sure who compound VC is, but I like partially agree. I think we just came out of the first third with the halving, so we're now in the meat of it.
All right. So if you're wondering where we are in the play, you just heard it from Ben Lilly. We just got out of the first third. We got many more innings to go. Good stuff. JJ, GameStop was up, I believe, when I saw this, 74%. Who's got better degens, GameStop or our meme coin flippers?
GameStop, man, look at it. I think it's up like 120% or something pre-market.
Oh, it's gone even higher.
Yeah.
Oh,
this
man.
Is something, not even your meme coin degens could dream about. It's
man,
134% right now.
Yeah.
It's $1.
Oh, geez. Well, who says TradFi doesn't like to play those games? My gosh.
I saw a tweet yesterday. It said Robinhood is the Caesar's Palace of degen, and then you have Solana, which is like a casino game at a rest stop in Reno that you're playing. So
I used to live in Reno. It's all too accurate. That brings back
first slot you hit when you land in in Nevada,
or when you're buying beer at the grocery store. Nothing better than losing your last dollar on a slot. Ben, by the end of the decade, will El Salvador still be the largest sovereign holding Bitcoin?
That's a fun question, and curious what some other people on crypto Twitter would think on that one, but I think no.
Oh, it's going to expand out, huh?
Mm-hmm.
All right.
Yep. As far as who, that's a good game theory discussion that I don't think I am well nuanced in.
Yeah, and I'm probably discounting the holdings the U.S. government already has. They just consider it confiscation rather than holding it in Treasury. But time will tell. JJ, we got the last question here. Everything on X was all about ChatGPT, their latest release of their model. They're saying it's going to replace teachers and service workers, writers. So is it overhyped or is it underappreciated?
That's a good question. I'd say it's probably about right. Probably a mix. You still have a lot of people that disbelieve it, and then an equal amount of people that are probably overly optimistic. So truth's probably somewhere in the middle there.
Funny enough, we got Drunken Miller saying either way with any politician, things are going to get screwed. And then we have ChatGPT saying, no, don't worry, hold my beer. I'm going to take everyone's jobs anyways. All right, well, we're going to get into the market. But before we do, I see a bunch of people in the chat here. Welcome. Love to see it. I got Tabby, Light Signatures, David C, Happy Cake 100, Hello World, KS, Gabriel, Adrian, Delson, Aditya. My gosh, we got so many people in here. I can't even catch up. So glad to have you here. Hit the like and subscribe and hit the notification bell. Share this wherever you want to hear, wherever people want to hear some sophisticated take on the market. And guys, we've got something super exciting to announce. On April 22nd, we're going to be doing our very first AMA for options traders. It's going to be in the new studio. So if you have signed up with the coin call ID that's in the description, and you have at least signed up with an account, go check out, sign up for the AMA, and you're going to be able to ask questions directly of JJ about how do I get my options trades started. If I've got other questions, because I've already placed some trades and I have some other questions, it's all on the table. It's an AMA. That's why we're doing it. The only stipulation is you've signed up with that coin call account and you're ready to join in. We're also asking for your wallet because it will be gated for those whose wallet is actually on the roster. So it's a little bit of a VIP event, but we're super excited to have it. We know a lot of people have signed up and they've got some questions, and we're going to be delivering that back to you in the brand new studio. We can't wait to share that. So a lot to come. Again, link is in the description. All right, JJ, I'm bringing it back to you. You just wrote a piece about compression, and it looks like it may start to, well, I'm not sure it's about to break out, but you were showing some signs of some excitement in that article that just came out yesterday in Espresso. I looked this morning, BTC sitting at 61,845, Ethereum under 3,000 and 2,900, Sol 146, ETFs had about 66 million coming in yesterday. So tell me, what's the tell of the tape? Does it look like we're about to break out into something better than the boring grass growing, paint drying walk we've been doing for weeks now?
I sure hope so. It's been quite boring, right? Like we see this range, and it's just exactly like you said, just compressing, right? So we basically had that high marked a couple weeks ago in early May, around 66,000, and the low on May 1st down around 56,000, and now we're just kind of diddling in the middle here, compressing. You see these lines keep getting tighter. Bollinger Bands are pinching in. 100-day moving average keeps moving up. 50-day moving average keeps going down. And eventually price is going to move from this range. You see this time and time again as these lines become more compressed, as you see here in January. It leads to an expansion, or even back in earlier January. I'm sorry, this was February when it broke out to the upside. And again in January, eventually broke down to the downside. So price can only stay in a range for so long. And I think we're kind of nearing the tail end of that, whether that's this week, towards the end of this month. Not exactly certain yet, but I do believe it's coming. I think it's high time for price to start moving. Hopefully in the direction or the opposite direction of Dixie, which looks like it's breaking down. If we can get a good confirmation on the CPI report tomorrow that Dixie's officially in a downtrend, I think we could be potentially in for more upside here into the end of May. So let's see how that plays out. But for now, it's just the same as it's been for the past few weeks. Price just sitting stagnant, chopping back and forth, and luring in over leveraged traders and then wiping them out. That's just kind of the tail of the tape here.
Yeah, I saw that last night when I was looking at the data. The perps, they wiped out. I'm trying to look here. I think it was about 30 million in capital, which isn't a whole lot. I'm sitting about 16 billion in total notional for the perps. Interestingly, though, it was about a 3-to-1 wipeout of longs versus shorts. But tell me, I want to get into what you were talking about in terms of compression, because you wrote that really interesting piece in Espresso. And for all those, if you haven't signed up to Espresso, I definitely recommend you do that, because JJ, Ben, and the rest of the guys at J Labs are definitely sharing a lot of alpha there. The piece you wrote yesterday, though, JJ, was about this compression starting to really get more narrow. And as you looked on the options side of it, talking about the house always winning, expand on that idea about what you're seeing and where you think it's going to head from here.
Well, if you look at this 100-day moving average, it's basically been functioning as support since January, since the ETF first launched. We came down and retested it after the ETF, and then obviously that sent us into this uptrend. And now it's been holding as support once again. So it's kind of been tested and tested, and you don't like to see it get tested too many times. Obviously, it becomes weaker support each time that it's tested. So the odds of an outsized move to the downside, if it fails to hold, say, through the next couple weeks, they become increased due to how long the support's held. So just by fact that we've been kind of resting on it, I think that's telling you that a big move's coming within the next week or two. It could be as soon as tomorrow, or it could be towards the tail end of this month. But I do think we're due for a breakout of this range. To the upside, if you look at the 50-day moving average, that's kind of and also this Bollinger Band here on the daily chart. if we're able to break above like the confluence of these two things here, as well as the 50 RSI, like these are the things you look for confirmation of an uptrend. So it's conceivable that, say, CPI comes in favorable tomorrow, or Powell's comments are favorable. I believe he's speaking in a half hour or so. If he gives fuel to markets and this recatches momentum to the upside, you can see how price performed after it recaught this 50-day moving average, as well as broke out above the Bollinger Band. 50 RSI market just tends to be a good indicator for more upside to come. So it's not out of the realm of possibilities by any stretch of the imagination that we could recatch this and just go on a wild run in June. But I do think the time's coming for price to make up its mind, so to speak, and ultimately exit this range, whether that's heading towards the 200-day moving average closer to 50K, or if that's a run back to new all-time highs. I do think we're kind of entering that window of opportunity here within the next 2-4 weeks for that move to start to manifest itself. And you'll see that either in a break below here, we start to lose those lows from early May, or obviously a breakout above 65 to 67K.
Well, what about from an options market perspective? Is it showing some leading indicators that may start to suggest where this is going to break forward? We talk about that all the time, and I thought in the article we were kind of highlighting some of that activity. I know you mentioned seeing the tide starting to churn all the way back in March. You noted in the article that you guys started to see those changes. Are you starting to see those changes again in the options market that may indicate what may be next? I know May. The end of this month is a large options expiry. I think it's about $3 billion in a notional value.
From the options perspective, and this is what we point out in the article, is you don't see the activity until the move manifests itself. That's just kind of the nature of options markets, is they're very reflexive. So since price has been compressing, if this is the implied volatility index, BVIV, and you can see how it's fallen off a cliff basically since Bitcoin stopped going up. Once it kind of found a range, the implied volatility levels, which is basically a measure of how much premium cost you're paying for these contracts due to the volatility premium that's baked into them, be it calls or puts, they're going to be more expensive when price is moving in a wild fashion the way it was in March. When price is basically going nowhere, you can buy these contracts for very cheap because the market's not expecting a whole lot. So when they're in high demand, like when Bitcoin's breaking out, or when it was breaking out, say above 60K, everybody wanted call options. So that meant the cost of call options skyrocketed, implied volatility levels skyrocketed. Market makers had to charge more premiums for those contracts due to the tail risk of how many they were selling. When there's not a whole lot of demand for options because everybody's been burnt by price basically going nowhere for the past month or two, there's not a whole lot of demand. So option market makers sell them for cheaper because they're just after yield at basically any cost. So it has this interesting dynamic to where if you look at the technicals of the chart, it looks like it's due for a breakout in anywhere from 2 to 4 weeks. But if you look at the options market pricing, it's not necessarily pricing in any drastic moves due to this implied volatility index, which is basically, gone nowhere. It's just kind of falling down, down, down. So until you see Bitcoin firmly break out above, say, the 65 to 67K range, or if it loses the lows 58 to 56K, then you'll see the implied volatility levels really start to spike. Because if we go below the lows of May, everybody will be in a rush for put demand, as we saw a couple weeks ago. Like, people don't tend to buy insurance until they really need it. It's just kind of the nature of markets. Like, I don't know why. If you were thinking that it's a possibility for price to break down, you'd be better off buying insurance now, right? And being covered if we do face this crash. But the nature of markets is people don't buy insurance until they need it. And likewise, to the upside, you'll see people chase call exposure if we start to see a breakout and everybody starts betting on all-time highs again. You'll see that kind of rush put demand, and it becomes very reflexive. So right now, it's kind of, if you're looking to be long volatility, I think that time's coming within the next week or two to really take a swing there, because your risk reward is very low.
It's not just markets, JJ. It's human psychology. You always want to think you're going to be the one who's going to escape the wreck, escape the storm. You don't want to have to buy that insurance and feel like it expires worthless, right?
Yep. That's exactly
it. We had a comment here from Toby. Hopefully I get that name right. It says, famous Don Alt just flipped bearish. Is the BTC top in? Ben, you've been quiet with those eyes behind us. Thoughts on Master Don Alt? He's an OG coming in bearish.
Yeah, that's a bit surprising. He's been around for a long time. As far as this commentary has been percolating up a good bit, which has to do with maybe this cycle is over. Maybe this whole halving cycle that we've kind of been prone to since kind of Bitcoin's Genesis block, this is with the ETF, that the ETFs sort of front ran all of the gains for this cycle. And I'm not a believer in that whatsoever. I was going back almost a year ago to some comments, some market commentary that we gave some of our clients discussing how do these cycles play out, especially relative to like a 200-day moving average, the timing before the halving, after the halving, and really just some basic sort of time analysis, if you will. And it still all looks very well intact. And so I think a lot of this has to just do with sentiment, just the overall boringness of the market. And then, of course, a lot of the overhang taking place with the regulatory regime that's happening. I believe a lot of people thought this ETH ETF was going to be happening this month. I personally did not. I thought August was a better time frame. With all of the regulatory talk that is going on, it's, if anything, we can see that it is an overhang. It's creating this negative sentiment, and we don't even see price responding that much anymore.
Yeah.
And so if we think of it like a compressed spring, if you will, this is about as far down compressed as you can get until the actual words of either some potential regulatory bill coming down the pipeline that could be negative, and we've already seen that actually come through in Congress, and they're voting to repeal it, and Biden's already talking about vetoing it, right? That's a lot of just negative stuff in general.
Sure,
And we
yeah.
don't see price responding a whole heck of a lot. So what happens when there's just a glimmer of positivity that hits the market? And that's kind of what I'm focused on is if there is a little bit of a change in the current here, how fast can price move? Because it's a bit of a mean reversion on sentiment. And so with Don Alt's comments, that's kind of how I view the market. Just everything is just really overly negative to the downside.
Well,
And we need a little bit of a mean reversion coming up.
yeah, and I would add, I mean, I don't know actually, I didn't actually see anything directly from Donald. This was a great comment. I appreciate Tommy dropping it here, but there really is that question of like long-term play. I mean, we started off the show talking about some of these 13F filings, the money that's come in either from traditional banks and commercial banks, other ones that maybe have endowments, as you were talking about for Bracebridge. That's obviously very bullish on the long term if you see these starting to take these positions. And this is only quarter one, right? We started to see the bleeding from GBTC seems to appear to perhaps be slowing down. There may be some rotational plays going between some of these ETFs, but there's some positive news there. As you said, price hasn't really responded. And then if you ask yourself, where are we in this cycle? Ben, you just made the case, or at least you made the statement, we just got out of the first third. We still have, 6 more innings to go. I think people are so focused on what's happening today and not thinking about the next 18 months.
Absolutely. Wrote about it, I think, a week or two ago. And if you go back to every halving, look at the price action in the 6 to 8 weeks that follow a halving. It's just that basic of an analysis that you can do and see like this is actually pretty similar to what we've seen historically. And if you just hang your hat on that, you can make some pretty good decisions. You don't need to get into all these price levels and look at the average age of coins on the market, check out UTXOs or HODL waves. You don't need to go that far down the rabbit hole to really understand like we're in a pretty good position here.
Yeah.
And if we're going to kind of have a boring market, you can see the effects that takes place. People sort of bow out. They have this hesitation. They're second guessing themselves. And that's just more opportunity for you to really get the position that you want and start preparing to position yourself to quickly move down that risk curve when the time comes. And so allocate however you wish to do it. I really do have my eyes on looking at implied volatility because it's getting compressed so much. And the sentiment is helping bring that back down. And if we think about, I posted a chart on X yesterday about Bitcoin gains since the ETF approval. that chart's really interesting because if you look at the sort of the P&L, if you will, since that moment, it's been relatively flat. And so all the gains were ahead of time. And we have this really negative sentiment on the ETH ETF right now. And so if the market were to start ever pricing that in, which it clearly hasn't because it's very down in the dumps, especially relative to Bitcoin, when are those gains going to happen? And I would have to imagine it's happening in the next half of the year.
Yeah.
It's
Very
crazy how
exciting.
greedy we all are, right? Like you think if you would have told us a year ago, hey, Bitcoin will have hit 74,000, whatever it is, and be consolidating around 62,000, you'd be so anxious to take it. But instead, we're just kind of prisoners of the moment, and it's like, oh, it's over.
JJ, how much of this, just from a psychology perspective, gut feeling, does this feel like we're back at 30, the 20 to 30K range?
Yeah, it does a bit, like just that kind of constant chop back and forth. Like you look at this price action, it's just been there's been a whole lot of nothing going on basically since we reached that parabolic top in March. So it's easy, like 1 month passes, okay, we've had a washout, we're ready for new all-time highs, and then it doesn't happen, and you just continue to chop lower. It becomes a very frustrating market to watch and trade.
Yeah. Well, it's interesting too. Like the short-term thinking, when we drop down to 16K, everyone's going, oh, we're going to 10. Then we up at 30. It's like, oh, are we going back to 16? Now we're up at 60. Oh, well, maybe we'll hit 40. Just the lack of memory, the lack of history, right? Of understanding where we just were and where we are today.
Yeah, trading's very bad for your mental health.
Oh, geez. Yeah, definitely. Yeah. Turn off the computer. Don't listen to us here. We definitely want to promote better health than this.
I also want to add in just the cost of capital. I love talking rates, and here's that moment. So I feel like I just really got to jump in here. So bringing in some rate talk to what's happening in crypto. A lot of people kind of forget like how expensive stable coins and capital in general got in this cycle. And it's going to take some time for that to kind of reset, cool down, and to prepare itself for another move to the upside. Like I have on my screen right now, this is the interest rates. Basically, if you want to get DAI from MakerDAO and lock up some ETH, these are the rates. I mean, we had it going up, I believe, 15% or 16% on some of these vaults, and that marked the top of the market. So it's almost like you can't tell me the cost of capital in crypto doesn't matter, because it does. I mean, it lines up a lot of times with the price action. And so it's been climbing back down. They've been bringing the rates back down. You can even go to the Aave markets and look at stable coins. And you can see right here, this is the cost to borrow. What is this? DAI on Aave's V3 Ethereum market. I mean, look how high this eventually got, 25%. This was over here around 30%. And it's just recently, in the past, looks like May 6th, May 7th. So just a week ago, we were in double digits, and now we're coming back down to kind of quote normal, 7-8% rates for borrowing a stable coin. So the market has reset. It's cooled down. And so now it's just awaiting that next catalyst. And so this is all good signs. This allows for bigger movements to the upside to take place.
So you're seeing the rates reset. Ben, is this usually, in your mind, is this a lagging or leading indicator? Feels like this is more responsive to demand in the market, but what's your take on that?
It's probably very well correlated with volumes, with just, heightened volume, heightened interest, heightened speculation in general. That's going to drive the demand to go ahead and borrow capital, because if you're borrowing capital at 15%, where are you going to go ahead and get a return on that money in a short period of time? And then you start layering in gas costs, swap costs, and all the other transaction activity that might occur, even bridging. Like there are these costs that make this borrow rate actually even higher at the end of the day, because a lot of times we try to find arbitrage opportunities, and you can see almost the spread of 4 or 5%. And then you look at the cost, or really the amount of capital that you would need to do to make that, to basically close that gap. And then you start realizing and looking at the liquidity pools that, you're going to really put things out of skew to where that gap that exists is going to close down. And so we saw a lot of that. and now we've seen everything kind of come back down. So once that starts to pick up, the volume starts to pick up, price action starts to pick up, you're gonna have traders, firms go ahead and take out those positions, because they're also going to realize that even the speculative nature of the marketplace is going to create these opportunities to go ahead and make outsized returns.
Well, definitely something to keep an eye on. I know we were talking about rates offline. It's good to see them cool down. It feels like we've seen a cool down in the perpetuals, the options. I'm sure we'll get into a little bit more when we talk a little bit about positioning. But overall, this looks like a very interesting reset, and it seems to support the case that we're out of the first third of the market, but there's still a lot of room to go. JJ, I want to transition us into outside forces, because I know we've got a bunch of comments here going on, asking about PPI, asking about the Dixie. Anything else before we do that about Bitcoin, about the markets you want to share?
No, in terms of what Ben said, I think that's spot on. Like you think of, you look at the open interest levels, funding rates, et cetera, the cash and carry rate that was so popular back in March, implied volatility pricing on options, just the way everything across the board's been washed out. And, you could say like institutional adoption is essentially the enemy of speculation because price hasn't really lost any meaningful levels, but everybody's been washed out, right? And it's just, you're playing against ultra sophisticated players now, algorithms, et cetera, that are way more advanced than what people are used to. So if we were to experience a continued upside from here, it wouldn't surprise me, due to how much has been washed out over just, it's only been 2 months of, basically, if you look at this chart, it doesn't look like all that big of a correction. But if you were to gauge sentiment, you would think we're kind of back at 40K or so by now.
Yeah.
So it's interesting.
Yeah, the muscle memory, the emotional memory that people have, traders have, it's something to behold. All right, well, let's talk a little bit about outside forces, because we just had the PPI print, and I'm trying to get some of the data here. I've got too many windows open. It looks like it came in about on the estimates. The PPI, I think it was expected to be about 2.4, came in at about 2.4 year over year. Some of the information I'm seeing, and I can't quite see it. This one's from Liz Ann Saunders. She's a macro analyst. She's always reporting on this data. April PPI was 2.2% year over year versus 2.2 estimated, and 2.1% prior. Core was 2.4% versus 2.3% estimated, and 2.4% prior. It sounds as if this data was coming in pretty much in range of what the market was expecting. When I looked at Dixie this morning, JJ, was about 105.19. What is it doing right now? How is the market reacting to this new information?
So right now it's at 105.3, and it's not looking too good. And I believe this is an encouraging signal for everything we were talking about in terms of Bitcoin. Just waiting for a catalyst, right? So I guess we'll have to wait to hear what Powell has to say. I believe he's speaking in about 20 minutes or so. And then obviously CPI tomorrow could change this pretty drastically, pretty quickly. But if you look at it now, it's lost all of its technical momentum, and it looks like it's heading lower. And I think back below 104 is probably a risk on signal for Bitcoin. As we've been saying, like this, it's a leading indicator, but it takes a bit of time to play out. Anytime you're using Dixie as a proxy for Bitcoin, Dixie will make a clear top, and then it'll start to settle, and then you have time to enter Bitcoin. And this is possibly one of those times. So if we overlay it here, this is an interesting correlation that I was looking at last week. If you look at when this whole MA ribbon flips, this ribbon right here that you see, anytime it goes from green, which signals an uptrend, to red, we've seen pretty large moves to the upside from Bitcoin. You could go back, you go on the daily chart back to March of 2023, and you see this play out time and again, where Bitcoin tends to make anywhere from 20 to 30% moves in a short amount of time, shortly after this ribbon flip. So we see one here in June 2023, I believe. This was basically the exact date that BlackRock filed for the ETF. You could go back to October of this past year when the ETF was approved. The news tends to sync up with this. No idea why, but it's just how it's played out in recent history. You could look at even February of this year, DXY flipped bearish, and then we see this massive leg up from Bitcoin that ultimately drove us from 50K all the way up to 74K. And then obviously it flipped green, basically right at the top here, around 64K or so. DXY started to go into an uptrend. That was basically your risk off signal. And now we see that it's flipped again on May 6th. And we see Bitcoin's rebounded. That was right around the lows. So it's already rebounding. And I do think if Dixie takes a fall lower into the 104 and below region after CPI tomorrow, we could see a nice move to the upside here from BTC, just based on how this correlations tend to behave historically. So I think it's a good risk on point if the macro data plays along in the coming days, but it's something to be aware of. And it's like we were saying, like the market's just waiting for a catalyst. We haven't seen any rush need for spot buying, and that just kind of end up in this ping pong market where it goes up and down between resistance lines, resistance and support. So if we do get that upside catalyst in terms of a falling DXY, I think the upside could come on pretty quickly due to how this correlations tend to play out in the past.
So very interesting to see that ribbon flip, potentially be some fuel for Bitcoin to get higher. Ben, what's your take when you know, just a 100,000 foot view? We've talked a lot on this show about the Fed looking for an opportunity. First it was we're gonna look at the data, right? First it was there was going to be rate cuts. We're going to look at several coming into this year. Then it was we're going to let the data kind of drive it. You've talked about the idea that they want to get to that point where they're saying maybe there's a rate hike on the table, and then potentially that's when you start to see this start to trail down. Actually, see a break in inflation data and give the Fed the opportunity to actually start lowering rates. What's your take as you start to see this information? What are you seeing, or what would you like to see from Powell to really give you a sense of where this may go and whether or not this data is starting to be in the range of what the Fed is looking for in terms of their inflation fight?
Oof. There's a lot of different, I guess, roads we could take when talking about all those different topics and themes that have been happening when it comes to Jerome and the Fed, inflation, even money supply of late. You know, I think it just ticked, its year over year just kind of ticked positive for the first time in a long time. This has to do with the balance sheet at the Fed and what they're doing there, kind of easing markets in a sense. What are they looking for? I kind of pause on it because at the moment it's, you know, Jerome really echoed that employment was, it sounded like his main factor that is going to be how he looks at the market going forward, how he wants to evaluate the data, and then how he really tries to ensure that the economy still maintains this healthy level of employment, healthy level of economic activity, and then that the rates can go ahead and do what they're doing. That to me is what he's more focused in on. I feel like to a degree, he feels like inflation is where he wants it to be. And he understands there's a lot of lag effects that still exist in the marketplace. I believe he was pointing to rent in particular. And that's going to be this lagging indicator that's going to be in his favor in the months to come. And so he kind of has that in his back pocket. And so when he thinks of inflation, it sounds like he's good with it. He's cautious, right? He's not going to ring the bell like it's defeated, but he's okay on it. Employment is his biggest worry, is my takeaway. And with that, you know, we did have essentially the discussion take place that, you know what, maybe there are going to be rate hikes. We've had that. And to me, go back to this kind of looking at the marketplace as mean reversion on anything you really want to pick. And in this instance, we can think about rates here. Mean reversion, we went to the upside on the potential movement of rates. And I think now we're going to mean revert back to the downside. And so with employment putting in some not so great figures last week, I think CPI is going to be a bit of an excuse for the market to go ahead and move in the direction that it wants to move, which we see DXY already starting to reflect that today. And I think a lot of people are wondering, why is the DXY making this move on these figures that really aren't really eye-popping in one way or the other? And I think it's because it's been wanting to go that direction. So it's finally starting to make its move. It's a trend that's been taking place since the Fed has kind of eased conditions on the balance sheet. So
Well, yeah,
to me, this is all just a bit of a mean reversion move.
I want to know, are we seeing signs that the market's trying to front run the Fed? Because as you said, if inflation's starting to, it's trending in the right direction. The PPI, as I said before, kind of 2.4% estimated, 2.4% year over year. Yet the unemployment data is looking less and less. It's looking more and more rocky, right, with the data, and it's possible that that's starting to tick up. I'm wondering if the market's saying, listen, they're going to have some kind of intervention. The unemployment level is going to go up before the inflation, and the Fed is going to be accommodative. They're going to do something to help the markets.
Yeah, I'm in agreement with the market. Like, I think it's, almost calling Jerome's bluff. Like, look, you're not going to actually keep these rates this high for this long. Like, you're going to have to do something to create a little bit of a stimulus into the economy with a 25 basis rate cut. Here, is it coming in September? I think that's the big question mark. Is it coming before, or is it coming in September? To me, that's what the market's trying to assess right now. Right here on my screen, I pulled up the Fed funds futures for December, and I've it really doesn't matter because they're kind of painting all the same picture right now. But you can see when we talked about the discussion that rates could potentially be going higher, you can see here right at the turn of May, end of April, start of May, you had it really kind of put in this low here, and it printed this low right here, kind of an inverse head and shoulders. We'll go ahead and gap it back up, which is that expectation. And this is kind of counterintuitive here, but if the candles are moving up on this chart, that's really pricing in a rate cut. If the candles are coming down here, that's suggesting that rates would be going higher. So we've been trending in this direction, and we're kind of painting this reversal here. So if we pair it up with the sentiment check, it lines up, right? We've been very hawkish in terms of rates. We're coming back down. Employment data is suggesting that it needs a little bit of relief in terms of pressure. So let's give the market essentially what it needs to go ahead and run in the direction that the Fed ultimately wants it to do. Like, it wants it to remain healthy. It wants to avoid a recession. So what's going to help that? And, a little bit of relief would help.
Interesting times. And of course, we have CPI coming out tomorrow. And then obviously there will be a lot more commentary, I'm sure, in the weeks ahead. JJ, as you look at some of the three horsemen of the apocalypse, we talked about the Dixie, we've got oil, we've got, I think it was rates. Do you see any other signs that from an outside forces perspective, things look worse than you're expecting, right? Right now, it looks like with Dixie maybe capitulating, we may actually see some starter for Bitcoin to punch higher.
Yeah, everything looks like it's kind of lining up. It's just a matter of waiting for that confirmation, whether that's in 10 minutes or so when Powell speaks, or tomorrow CPI, or maybe it comes in June. But you tend to see DXY and oil fall in the summer months. So hopefully this is another repeat of that, and we get a nice little window to run higher here for risk. Like we were saying, like the market, if you look at those federal funds futures for December, you see how much they capitulated just since January. Like these were pricing in almost a 1.5% cut over what they are now in January. And then you just see how they've essentially crashed as the inflation data kept coming in hotter and hotter, and the market just gave up on those rate cut expectations. So like Ben said, it seems like a good time for it to kind of mean revert here and find some hope in the middle. And that would hopefully coincide with DXY falling back down to the lower 100 region. And I could see that giving BTC and risk in general some nice room to run, but just waiting. If you look at seasonality, it tends to be June, July seems to be a good month for risk historically. So you could easily make the case that that'll happen again. It's just waiting for that confirmation, be it tomorrow or in a week or two.
Well, I want to start talking a little bit about positioning before we do. I do have a question here in the chat about seasonality. KS says, do you guys consider seasonality as a factor for capping any BTC upside on a potential rebound reversion? Just with TradFi being on vacation and the typical attitude of sell in May and go away. JJ, how would you react to that? I mean, you talked about seasonality. It feels like there's different views on what it is. I mean, sell in May, go away implies there isn't a lot of action. We just talked about the potential for a reversion, maybe a punch higher during that exact same time frame. What is seasonality? How are you looking at it?
Well, you could look at May of last year, and it was basically just a never-ending chop range, essentially what we've been seeing now, right? And then June was ultimately a bullish month, and then you have that kind of summer lull as we get into July and August. And I think that's probably your best case scenario for Bitcoin right now, is to make some kind of punch higher, be it towards the tail end of May or in June. I could see that coming to fruition, as obviously lower oil and DXY, if they manifest to the downside, that could give Bitcoin some room to run over the course of the next month. And then I think by the time July comes or so, that's when people tend to be on vacation. You don't see a whole lot of exciting price action historically in markets at that point, and that's probably a good time to de-risk a bit. But I think there is a window for volatility to increase in June. In terms of like people being on vacation and whatnot, I don't think that really plays out until the summer months, when markets tend to do a whole lot of nothing.
Okay, whole lot of nothing. Hopefully, KS, that gives you some perspective on how these guys are thinking about that seasonality. Let's move into looking at some options trades. Before we do that, I want to give a shout out to everyone who joined us today. It's great seeing everybody in the chat section. Welcome, welcome. Love to have you here. Hit the like, subscribe button, hit the notification bell. Share this wherever you talk about crypto. If it's on X, if it's on Reddit, if it's on your SMS chains, I don't know, but definitely share it. We want to get out to as many people as possible. And if you're somebody that is interested in options trading, maybe you started your journey already with your CoinCall account. Maybe you're on the fence. We got a special event coming up on the 22nd of this month. We're going to be doing an AMA hosted by JJ in our brand new studio, which you aren't going to want to miss. The only thing you need for that is your user ID from CoinCall, and then to give us your account from your wallet like MetaMask, and you'll be able to get in there and have a full hour in which you can ask JJ any question you have about trading options. If you've already traded some, you've got some questions about it, or if you're looking to get started, we can help you with that. It's going to be just a great event for anybody who's interested in getting into this. And think about everything we just talked about today. The markets have reset on the rate side. We've seen perpetuals reset, options kind of sitting where they are, continue to be kind of poised and ready for that volatility to break out. You want to be positioned. You want to know how to place these trades before any of that action happens, because if you're starting to try and run when the market's already running, you're going to trip. And we don't want that to happen to you. So now's the time. Hit up that CoinCall account in the description. Get that account started. And if you already have it, fantastic. We also have the link in the description for you to sign up for that AMA. Again, it is going to be gated. You are going to need your user ID and your wallet address to get in. And believe me, you don't want to miss it. It's going to be exciting stuff. That's a week from Wednesday. All right, guys, let's get into talking about some positioning. We've been talking the last several weeks about a couple of different opportunities. One of them has just been around the longer term plays, looking into December, maybe a little bit in September for options for Bitcoin and ETH. Ben, you've talked a little bit about looking at more of a longer term play with Ethereum. I think it was ETH from Grayscale and doing sort of a DCA into that. So I kind of want to talk a little bit more about that as we potentially start to move towards this pivot moment in the market. So JJ, from an options perspective, are you more on high alert now as you start to see the Dixie potentially starting to break down?
Yeah, I think this is kind of a window of opportunity here to get long volatility. And again, you're not paying a whole lot in risk premium right now, and your invalidation is so close. Like, you give it a week or two and see how these things play out before deciding to cut positions. But I think it could happen pretty rapidly from here, whether that's the upside or the downside. I think you want to play straddles, which is basically being long calls and puts at the same time. And then you're exposed to directional changes in price, regardless of which direction it ultimately moves in. I think for the calls, again, we've been repeating this. I think you want to be long the end of the year still. So if you've been selling shorter dated volatility, now might not be a bad time to cover it ahead of tomorrow's CPI and just see how that plays out. And if you're going to hedge it with a put option rather than selling a call against it. If you look at these December call contracts, I still think the 70K calls, I believe we first mentioned these when they were around $8,000 or $9,000. They're currently around 11. I think that's a good position to continue to hold here, especially if you've harvested some shorter term volatility against it. Again, you just look at this price chart, how it changes. Like, this is a price hasn't really moved all that much since April, right? We've had kind of a 10% move in price, but that's basically resulted in a $17,000 difference in this contract. So you're basically buying it at a 17K discount to what it was trading at in March. And if you believe that price can go back to all-time highs, above possibly even 80K later this year, this contract's going to reap you a lot of rewards. So I think at these levels, it's very attractive, and you have so much time. You're buying so much time with this that you can really allow price to kind of come to you and see how it plays out over the course of the next couple of weeks. Decide if you want to keep it or sell it. It's not something where you're going to be risking the entire worth of that contract It's not going to go to zero overnight the way some shorter dated options were, right? So you kind of have time on your hand on your side with that, and then to hedge it, I think you would look towards the end of May, buy some put options. If you look at kind of the end of that price range, you could buy 56K puts, and then if we do get that washout to 50K, these would be worth well over $6,000 a piece if, say, CPI comes in extremely bearish tomorrow and price just totally nukes. You'll have some protection to the downside, which is going to prevent your losses on that December call contract from getting too steep. I don't think at these levels you want to sell a whole lot of shorter dated volatility just because the risk reward is no longer there, really. Like you look at these shorter dated contracts, if you were to sell like something against it, you're really capping your upside for it and you're not going to get a whole lot in return. So I think at these levels, you want to be kind of strategically long volatility with basically working on a shot clock and just seeing how price manifests itself over the course of the next week or two, and then decide what to do with those positions. And I think you could do the same thing with ETH. You could look at longer dated calls there. Let me pull those up. So if I was looking at ETH, the December options, you could look at something above 3,500 to 4,000. I'd say 3,500 are probably the best bet because they're not all that different in price from these 4,000s. About $400 a piece, and you're basically betting on all-time highs by the end of the year. So as we've been saying with Ethereum, people aren't really expecting any bullish catalyst, but if the tide turns, you could see ETH moving rather quickly to the upside, especially if that's paired with DXY, say, falling below 100. You could see things get really silly towards the end of the year. And again, if you wanted to hedge through that kind of sell the news event or in May when that price or when that news eventually comes out that they're denying or delaying the ETF, you could protect yourself with something like 2,800 or 27,000 puts, and they're pretty cheap, and that's going to protect you against the total nuke scenario where ETH falls to 2,000 or below in the coming month.
This is a good breakdown of some good options, no pun intended, so that people can play. What about if they don't have access to CoinCall or native crypto options? If you're looking at the equities, for example, in the US using, let's say, MicroStrategy or using the miners as a potential play, do you see that as something worthy of evaluation at this time, or are there other risk factors that potentially are taking that off the table?
The implied volatility levels on these are always much higher. So you're basically paying more for these contract premiums due to the beta effects and how much they move in an outsized fashion to BTC. But again, I don't hate this play. I'm not really in love with it until we kind of see some confirmation from BTC that, hey, it's moving higher. And then maybe we could see kind of a GameStop effect on things like MicroStrategy or these minor stocks due to how much short interest there is on them. Like I could easily see if Bitcoin goes to 80K, MicroStrategy could possibly trade above 2,500 or so in the coming months. So you could take a risk on that, but again, you're paying a lot higher premium, so beware of that. And I think again, you would want some time. I don't think you'd want to be playing anything ultra short dated here, but it could run like this. It doesn't look the most technically bullish yet. It's not really. It hasn't flipped or confirmed anything to the upside yet. But again, if BTC starts to run over 65K, this could heat up pretty quickly. Same with these mining stocks, which have gotten beat down over the course of the past week. They're kind of entering an interesting area here. Looks like this might be due for a bounce, but it's all contingent on BTC. So be aware that kind of beta effect. Like if BTC runs to the upside, you could expect these things to double, if not more, if BTC makes new all-time highs. But again, if BTC just kind of stagnates, these are going to continue to get beat down.
Definitely interesting play. Obviously, a different risk profile, even though I think a lot of people are using them as that beta play. Ben, I want to wrap this up with you. If we start to see that capitulation moment in the market where the Fed seems, they're seeing the CPI numbers that we want, the Dixie starts to roll, and we start to see some momentum come into Bitcoin, how does that change or alter your perspective on looking at some of the other investments you have outside of Bitcoin? I know you've talked about Ethereum several times on this show. Maybe some of the other assets. Does that increase your DCA schedule? Do you just continue on at sort of the same pace? How do you think about that if that starts to move?
Right. Yeah, definitely. And before I just get into that, I like to say that options is it's a better way to express the current market environment right now into a trade, just because, we talk about a lot of catalysts to the upside. And I think for the first half of the show, we were really kind of painting a picture of how the market is positioned to move higher. DXY is going to help kind of catapult it even higher, and how Fed, Jerome, and all those things are kind of working in unison towards the same direction. And we're kind of capitulating on the negative sentiment almost, with probably a denial on the ETH ETF will be kind of that nail in the coffin on that side. And we really kind of just painted that whole picture, right? So everyone's probably thinking upside, upside, upside. But on the flip side, if you look at volume levels on various exchanges in crypto, like liquidity, even within like the 2.5% band, which is a pretty important band that exists within centralized exchanges from a market maker perspective, it's drying up a little bit. So if you think about trying to engineer liquidity in a marketplace, one of the easiest ways that comes about is through a nice wick to the downside. So that's why options, if you're able to kind of angle it in a way where you can go ahead and go long volatility, you kind of have exposure to the downside and maybe more long-term exposure to the upside. And options allows you to express that in a really nice and elegant way that DCAing won't really allow you to do, perps won't really allow you to do. So when a lot of people think why options, like that's kind of it right there. This is that moment where options really shines. So keep that in mind, because a lot of the things we talk about is long volatility. It's even uncertainty in the next direction that price makes. Like even Ethereum, if you pull up the Ethereum chart, it's been tested its support several times now, and it's just been knocking on the door. The door feels like it wants to open up and just let liquidity pour in, let volume pour in. The timing with what Gensler's going to say looks like it's going to line up pretty well. So keep that in mind. Now, closing that chapter, moving into your question, Marconi, on where am I kind of looking at? If we think if the first third is behind us now in this cycle, that was a pretty quick cycle. It might have felt a little long in some regards, but it also moved down into the meme coin phase relatively quickly. And so if we look at the next part of the cycle, it's going to be a little bit more drawn out. And because that, I think the sector that really didn't get to shine a whole heck of a lot, and I think I've mentioned it before, it's just the alternative layer ones outside of Bitcoin and Ethereum, and also outside of Solana. I kind of moved Solana into the Bitcoin Ethereum bucket, if you will. But those chains have been having some good developments of late. Some of the work that I've been doing with Cody, hopefully we bring him on the show here soon. We've been looking at a lot of fundamentals and trying to figure out how can we rate these systems fundamentally so that we can better understand when things are starting to look pretty attractive. If we go ahead and we dig that up, probably not today, it's not enough time to really do so, but some of these alternative layer ones are starting to show some nice positive signs. And if we go ahead and we look at some of the advancements that they made, I think like Avalanche went ahead and had this major tech upgrade in terms of throughput and the ability to go ahead and have a lot of apps running on its main chain. It's had a really good improvement that has flown under the radar. And then we had Phantom had some development, some projects are coming about thanks to the main dev that works over there. It's almost like a one-man show over there. But it's not the only one. And that's been flying under the radar. And so if these things do kind of get their place in the sun here for a little bit, especially early on in the cycle, it's going to have this wealth creation effect on those layer ones. That's going to allow the ecosystems on those chains to really start attracting capital. And so that's what I'm really looking forward to seeing. And if we do see it, then we will get that kind of that longer cycle unfolding here in the second half and maybe early 2025.
All right, that's the answer to the question. What are you looking for from a DCA perspective? A little bit more nuance, as Ben is the man to do. But with that, we are going to wrap it up. Did have a question here in the chat from Sal saying, "Hey, can you give me more insight into signing up for the AMA?" Yeah, it's really simple. Super excited. It's going to be next Wednesday, a week from tomorrow, 9:15 Eastern, same as this show. And you're good. All you need is your user ID from CoinCall and a wallet address such as MetaMask to be able to get in and ask your questions. There's a sign-up sheet in the description, so definitely check that out if it's something you want to do. And Ben just laid out the case for looking at options. They're just such an amazing tool that you have access to really express a trade and cover your risk. So, JJ, Ben Lilly, thank you so much for dropping by the studio, dropping this alpha. I want to thank everyone who dropped by the show. Definitely asked some great questions today. We're entering an interesting time. We're probably going to see a breakout of the markets. You're going to want to have that dry powder, so definitely make sure you have some available to be able to drive into the market for the final 2/3 of this bull run. This is Marconi White signing off.